Hi everyone, how are you doing? Hoping well. Welcome to a video. It's time for another public investment portfolio video. It's time for another update, and remember, as always, this is not financial advice. I do me, you do you. Take everything that I say with a grain of salt. This is just for entertaining purposes, so that in a few years I can look back and rewatch these videos and see why and how I was building this portfolio. This update is a bit different because I normally do it monthly, and actually today I'm anticipating my November purchase for this late October, because I anticipate in the next month I will really have I will not have that much free time to do a video and post it, whatever, so I will anticipate it, and this will count as a contribution for the month 11 in this case. So I'm gonna open the Trading212 app to see how is our portfolio, the performance is looking. Is not looking great, so the total value of the portfolio is 490 euros, as you can see here on the screen, and we have a total return of minus 9%. So I invested 540 and right now it's worth 490. The markets have been bleeding all over the place, so technically we are outperforming the S&P 500, but it's never a good idea to look at the portfolio and see that it's negative. Luckily for us, this is a long-term oriented portfolio, so in a few decades that's when I intend to cash out, and this is the best time for stocks to be crashing because you can accumulate them at lower prices. Although it's never easy every time you open the app or whatever and you see these red numbers. As you can see here, the Chinese stocks, Alibaba for example, JD.com, Tencent, they are all down. Tencent is like 30% down, Alibaba is like 15% down, and this is all because of the geopolitical situation that we're currently living. I don't want to get into much detail on that or get political on these videos, but as you can see they represent a really small amount of my portfolio, 2% for Alibaba and 2% for Tencent, 2.61 and 2.37 actually, and this time this is always like a risk. I will dollar cost average again to these companies. I feel like in the last updates I haven't been contributing that much to Chinese companies, and I want to have some exposure. Just full disclaimer, I have other portfolios that I don't publicly disclaim, and I am invested in this company, so my opinion is biased, but like I said in the beginning of this video, don't view this as financial advice. You can see others, even Google is down because they missed their earnings expectations, and I feel like this is a better time to dollar cost average because now we are getting the reports of the companies, of these big companies, and they are like below the expectations, and the market is like overreacting in my opinion and having this crazy move. Like, how is this like even possible for a company this big? Intel is down. I'll obviously dollar cost average into this one, and I already created the pie chart for the month 11. So here it is. Let's see the distribution. 20% is going to the S&P 500 ETF, as always, very traditional. 20% is going to S&P 500 information technology sector, and this is like there's a lot of Apple and Microsoft. It's a big chunk of this ETF, so most of this is also going to these companies. 10% is going to Meta, Facebook, 10% is going to Alphabet, 10% is going to Alibaba, 10% for Intel, 10% for JD.com, and 10% for Tencent. As you can see, I am being a bit more aggressive because I feel like in bear markets, the average or the traditional index, these big baskets of stocks, they will trade down, but if you can find some value among the stock market, you will find some companies that will have really good growth, and this is what I'm aiming for. We'll never know, won't know for sure during this year or the next one, most likely, or the next couple of months, but in a few years we can look back and see if this was a good strategy or not. So we will have to stick around to see this, or probably by that time I'm not even making YouTube videos, or you totally forget that you watched this video. So anyways, this is like the overview of the portfolio, and I'm gonna invest. I've been doing more or less 40-60 euros per month. This time I'm gonna invest 60 euros as well, so that we have here some kind of consistency, and we have like 6 euros for all these individual stocks and 12 euros for the ETFs. Let me see how much would it be with 8 euros. So it would be like, yeah. But I'm gonna stick to my dollar cost average, and I don't want to like over budget this time. And I feel like if in the next month, in this case it's gonna be like December, things keep falling down, I will increase my dollar cost average if I can afford to do so. You always need to make this balance, so I'm gonna confirm buy always invest money that you can afford to lose. Right now I cannot afford to lose more than 60 euros, so this is what I can contribute right now, and this was also the main purpose of this portfolio, is to, with small amounts, you start building something. In the beginning, right now the portfolio is worth like 500. Okay, so the pie is completed. Right now the portfolio is worth 538 euros. So if you ask me in 1 month to invest 500 euros, probably I couldn't do it, but it's been almost a year by now, and slowly this is how you build a big one. So this is like how it's looking right now. So let's see here the allocation. So we have, yeah, the main majority of it is for the ETFs. Then we have Google, the biggest position, Intel, Meta, Alibaba, Tencent, Farfetch, Amazon, and other, which is mostly like Pinduoduo, I think. So this is it for today. Thank you all for watching, and I'll see you in the next update. Bye.